Good morning. Thank you for joining us for today's webinar, Peeling Back the Layers of Remote Work, Employee Compliance, State and Local Tax, and Payroll, presented by Ray & Associates, a top 100 regional CPA. My name is Imani Fields, and today I will be moderating the webinar. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. If you'd like a copy of today's slides, you'll find they're available in the handout section of the webinar dashboard on your computer screen. Today's webinar will be presented by Renee West, Kathy LaMonica, and Dee Gray. Renee West is a senior manager and leader of Ray & Associates HR consulting practice. With more than 27 years of experience in human resources, Renee specializes in assisting organizations with manufacturing, nonprofit, contingent staffing, food, and other industries with their HR challenges. She's also serving on Ohio Society of Human Resource Management's Board of Directors as Central District Director. Kathy LaMonica is the income principal in SALT Technology and Consulting with more than 18 years of experience in the tax industry. Joining the Ray team in 2018, her focus is on sales and youth tax consulting, compliance, and implementing technology solutions. She is a certified implementation specialist for Avalara and Vertex Sales Tax Solutions. Kathy assists clients with all matters of state sales and use of consulting and compliance projects. Lastly, Dee Gray joined Ray & Associates in 2006. She's a client service specialist with a focus in payroll services. She earned her Certified Payroll Professional Certification in 2018 and serves as the Payroll Services Manager for Ray's clients. She is the Vice President of the Hall of Fame chapter of the American Payroll Association, a national member of the American Payroll Association, and a board member for the Ohio Conference for Payroll Professionals. Dee has over 15 years of experience in the accounting industry. And now I'll pass it over to you, Renee.
Thank you, Imani. Good morning, everyone. Thank you for joining us. We appreciate you taking the time. As you know, this has been a very challenging year, and a lot of workplaces have either transitioned some of their workforce to remote work or are considering that option. And today we plan to share some resources and insight to help employers be able to have policies in place and procedures as we have this be our new normal. So next slide, please. Specifically, from my section from the HR perspective, we'll be looking at remote and hybrid workplace considerations, remote work program, what are some options and what should that look like? What policies should you update to be reflective of the remote workforce? Recruitment practices, how has that changed? How has the recruitment landscape changed in reference to attracting remote workers? And one of the big pieces of remote work is employee communication. How can organizations help to ensure that there are established methods of communication with those remote workers, that performance expectations are set, there's accountability in place, and that one of the biggest key factors is that you're keeping your employees engaged. So we're going to be high level over all of these areas and also taking questions at the end. So let's go ahead and move forward with the next slide, please. Remote workplace program. We've talked with a lot of clients and a lot of industries as to, we're thinking about putting a remote workplace in place in our organization. Where do we start? What should it look like? There are a lot of options and templates out there, all of which we are happy to share with you as a resource. And basically looking at establishing certain sections that you should have in the remote workplace program. And that includes the eligibility, who within your organization is eligible to participate in the program. Also look at determining the schedule. Is a lot of companies are going 100% remote. Some might have a hybrid schedule where individuals have an option of working so many days at home, so many days in the office. So providing options as well is definitely a part of the structure of the remote work program. Responsiveness, also including in this program, what is the time frame for acceptance or denial of this request? Being able to share the timeline so individuals know what that looks like. Also, from a security perspective, looking within the remote workplace policy of ensuring if individuals are working at home, how is the information being secured? Working with your IT department to ensure that all of your confidential information is still kept confidential, that workplaces still abide by the same type of security measures that you would have as if they were sitting within your actual office. And that also includes the equipment as well. What type of equipment are they going to need at home or at a remote location? So ensuring that all of these pieces are a part of that. You want to be sure that if employees are working at home, they have the tools to be able to work. Sending them home and not having a computer or not having the required tools will cause some frustration, and you want to make that transition as easy as possible. Also within the remote workplace program is how are you going to track productivity of employees? What are the expectations of them? How are you going to measure it? It's different than if you're in the office and you're able to walk down the hall and have a conversation with someone about maybe a performance issue. So if there is an issue, how is it going to be addressed? And being sure that that's outlined as well. Also within the remote workplace program, it's important to have a termination clause in there that basically states that from an employer standpoint, if there's an issue or something where the agreement actually needs to be terminated and moved back into the workplace, that there's an option to do that as well. And the physical environment, we talked a little bit about that from the security perspective, but having the individuals indicate where are they working at home? Are they in their kitchen? Are they in an office where the door closes and they have a lock? Again, all of this helps with that client confidentiality as well as the last portion of this program. So again, these are just areas that we found that are the best to include in a program. Again, it can be flexible based on your organization, but these are the specific areas that are the most important that should be addressed in those. Next slide, please. As we talk about remote workplace recruitment and retention, as everyone knows, the whole process really has been different for employers when they are looking to recruit now. A lot of individuals where previously we were doing face-to-face interviews have now transitioned to Skype interviews or Zoom. So employers are really looking at what are our existing recruitment practices and how do we need to evolve those to include the ability to attract and look at remote workers as an option where maybe before we didn't consider that. So in looking at recruitment postings, as organizations, continue to grow, if you have remote opportunities available, be sure that you highlight that, because this can actually increase the pool of candidates for your organizations. If you are in Ohio and have remote work, you now have the ability to possibly hire outside of the state as well. The remote work is definitely a way to create a better work-life balance for employees as well. And as individuals are looking for work, this is also one of the top things that they are looking for and can also help set your organization above others that might also be hiring. Increased retention of workers. This is very, very key right now as employers, are moving forward and hopefully beginning to continue to open up. We want to retain who you have. So that's important as well to ensure that this remote workplace can also help with the retention of workers, and it can also help with those individuals seeking others and recommending your organization as a place for employment as well. The recruitment, the retention piece from a remote workplace is also very important, and it can help to really manage employee attendance and reduce absenteeism. So the ability to, have a remote workforce does help organizations. It can also help boost productivity as well. Again, all of these do help with retention as well. And the actual climate as well. People aren't traveling as much. They aren't using their cars. They aren't using gas a lot. So this also helps companies, minimize their footprint, into the actual physical locations outside of their offices. And it also really, if we have remote workplace and policies and procedures in place, It also helps, hopefully we don't have another pandemic, but if there is any type of disaster or type of emergency, your organizations are able to pivot quickly, and then can also continue to, if you need to, recruit a different way. So again, these are just a couple of different examples. Next slide, please. One of the big pieces that I've talked to a lot of companies about in reference to as they're recruiting and trying to find key talent is how do we set our organization apart as an employer of choice for candidates that are out there. And now, again, given that the recruitment landscape is different and that ability to recruit remote workers, organizations really should look at their compensation and benefit programs. Ensure your organization's comp matches the demographics of the organization, or the demographics of where you're recruiting from. So for example, if you're in Ohio and you're hiring in an individual from Michigan or hiring an individual from California, what does that look like from a comp perspective? Those expectations of that candidate will be different. So there's a lot of internal pieces that you want to be sure that you are looking at as well. And also look at the benefit programs that you're offering. Ideally, yes, you have existing programs now. As remote workers, continue to increase, or you look to hire those individuals, what type of benefits are they going to be maybe more interested in than someone that might actually be physically at your location? Teledoc is one of the big benefits that we've heard a lot of companies are sharing, as far as the ability to seek medical care, a lot of different types of things that employers can do. Keeping in mind that the mental health of individuals right now is very, very key and should be. However, offering additional mental health services, EAP programs, family life balance, anything that you can continue to support your employee and their families is definitely very helpful as well. And employee relations, a lot of companies, it's different. You don't have, where everybody's gathering in the lunchroom to have a big luncheon and talk about or celebrate a birthday. So, what can you do to still keep employees engaged? I know a lot of companies have utilized the e-gift cards and, sending those to individuals and helping with that benefit, which is a nice perk, and also helps, again, as we talked earlier, about employee retention, which is really important. Next slide, please. As we talk about remote work, we also want to look at, from an employee compliance perspective and a policy perspective, what type of policies should organizations be looking at in their employee handbooks? And we're going to talk about a few here this morning as some of those top priority policies that you should be looking at. One of them would include the onboarding process, or the new hire orientation process. How does that look for a remote worker? Obviously, they're not sitting there, filling out their paperwork at a desk in your office. So how can you as an organization ensure that that new hire has a positive experience and feels welcome and still is able to feel the culture of your organization? So really looking at that onboarding process is very key. As we mentioned before, sharing with your employees evaluation and productivity measurements. Even though you're remote, you are still required to adhere to the organization's performance requirements and productivity measurements. So really outlining how is that information shared with your employees? What is that expectation? Is it a monthly check-in? Is it a weekly check-in? What does that look like? And communication is a big piece of that. How are you communicating to your employees? For example, traditionally at most offices and locations, you had a lunchroom or a break room where your workplace compliance posters were posted for all employees to see. How are those remote workers able to access that information? Is there a internet that you have within your firm, that, or your company, that you can share this information? ensuring that any type of communication that you would have in the office is still the same and is also disseminated down to those other employees that might not physically be in your office. And from a compliance standpoint, that is definitely, the Department of Labor will want to see, how are those remote workers able to see what their workplace posters are. So that's a big piece there. Also looking at policies from a Department of Labor and a timekeeping and payroll system. So how are those remote employees able to track and record their work time? For example, if they previously had a time clock they used at the facility, or what does that look like? How can you ensure that there is consistency, that there's an established structure to be able to record the time that they are working? And also looking individually within your state, are there specific employment regulations? If you're an Ohio employer, are there specific regulations outside of another state? So really being sure that you're looking at those state-specific policies and ensure they're incorporated into your employee handbook as well. I've talked with a few companies that now have employees outside of Ohio, so it's a discussion of what should you have and where should you go for those resources. And if you do have questions, please reach out. We're happy to help you, facilitate discussions as to what that looks like. Next slide, please. One of the biggest pieces that we've talked with a lot of companies about and communication. So your employees are, some are maybe in the office, some are at home. We've shared some interesting statistics here from SHRM that is talking about employees that are in the remote workforce, and it says 81% of remote professionals have experienced workplace conflict. So I think organizations sometimes think that, well, since people aren't physically together, that there aren't issues or there aren't conflicts or people aren't having issues with each other. Well, it does still happen even though people are remote. And 46% use a work messaging app for their arguments, which I thought was actually kind of interesting. So, your employees are still, having those discussions or those disagreements. So it's important that you're able to help facilitate communications to help them. And the next one was actually very interesting. More than 1/3 of respondents, 36%, felt that their bosses were too aggressive in their text. We all know that emails, texting, sometimes it does not convey that you don't have that body image or that body, you're not able to look at their eyes and see what they're thinking about. It can come across as being very negative, and maybe you as the candidate, as the person, didn't mean to say that, but the way you're communicating with your employees is also something you should be very, very aware of, because looking at the text and thinking, oh my heavens, I did a horrible job, my boss is mad, then that escalates into different things. So it's important to keep that in mind. After enduring virtual conflict with a coworker or a boss, 39% of respondents said they wanted to leave or actually left their jobs due to a problem. So as a manager, best practices, if issues come to your attention, address them immediately. Next slide, please. And that adds into, expectations should be clearly defined as to communication with your employees. It's different for individuals. So, being upfront with them and saying, here's our expectation for our discussion. With me as your manager, we want to be sure that we have continued and consistent communications. What is the best way? How do you like to communicate? Not everybody really is maybe comfortable with the Zoom call. Maybe they don't want to see themselves on camera, or maybe they just feel more comfortable talking on the phone. So talk with your employees, talk about what their ideas are as to how they best feel to communicate. Now, there are times where there are things that maybe need to be communicated a certain way. So thinking about the delivery of your messages to your employees that are remote, everyone's different. And being able to really cater to the different types of communications and styles of individuals also helps them from a communication standpoint. And the biggest piece is the expectations from a performance level. You know, you don't want your employees sitting at home and doing their work and thinking, am I doing this right? Am I meeting what I should be meeting? So having established metrics in place, as we mentioned before, with performance and expectations is also very helpful. And as we talked about, you know, what communication is good from a consistent for the entire team. You know, you also want to, you know, have your team members see each other and be visible and help from a networking perspective. So virtual coffees, luncheons via Skype. You know, I've heard of a lot of different things that companies are doing and continue to do. And there's a lot of different pieces and parts out there that you can piece together to make something helpful for your organization. Imani, can we launch a poll question? Thank you. So if we could take just a few seconds here, we'd appreciate your feedback as to, has your organization created remote work policies and best practices? Yes, no, or not sure. This is interesting just to see where some organizations are and possibly, you know, where they are moving forward. And policies a lot of times tend to be the definite piece to help structure these programs. So thank you for taking time to answer this. And being in HR, policies are always our favorite thing. So I'm sure you've heard HR before say we need to have a policy for that, or we need to look at what that policy looks like from a compliance perspective. So we'll give everyone just a few more seconds here, and then Imani will share the poll results. Great, so this is great to see. So we have 47% of respondents say yes, they have created a remote work policy. 39% at this point say no, and 14% say not sure. So again, those organizations that currently have those remote workplace policies too, it's great to see that you've done that. And again, if there's any questions that anyone has, please let us know to help with that. To follow up on communications, manager tips. Again, you know, as managers help to support remote workers, one of the biggest things is timeliness in all responses. It's a little different. Again, if you're sitting in your office and your employee comes to your office and says, I have this issue, I want to talk about it right now. What can you help me with? You at that time are responding immediately. This needs to be the same when you're a remote manager. Again, timeliness, you know, you might not be able to give them the answer right at that point, but at least talk with them and say, we are looking into this, we are following up, here's the next steps, here's the expectations. So whatever you would traditionally do in person, just mirror that as you would from a timeliness perspective in your communications with your employees. And again, gather all facts from any individuals prior to having, you know, follow-up communications with employees. Again, it's easier when you're sometimes in the office that you can talk with others within the team, but still be sure you're continuing to facilitate feedback from others on the team as well to help in your discussions with your employees. And the biggest piece is being proactive with your employees, scheduling weekly touch bases or monthly check-ins, whatever works for you to ensure that you're keeping in contact with them, you're providing the resources for them, and also turn it back to them as well and say, I'd like to see something from you as to what you want to do from a continued communication standpoint. What are your thoughts? What are your ideas? So really, you know, having that communication is very important and will continue to help to support your remote work program and also help to retain the workers that you have as well as we continue to navigate through changes and next steps. Next slide, please. So I thank everyone for their time. I'm going to turn it over now to Kathy and Dee. Thank you.
Thank you, Renee. Good morning, everybody. I just wanted to give a brief introduction. You know, Dee and I are going to be talking about the state and local tax implications of having a remote workforce. And you might be thinking, oh, I just have one employee in one new state, but we're going to get into a little bit, kind of an overview of what it means, but definitely, you can easily go down the rabbit hole when you start thinking about people working from anywhere going forward. Before we get started, I want to do our poll questions. We have the first one: do you have remote out-of-state employees? And we'll give you a few seconds to answer this, and then we'll go to the second poll question. I think a lot of people, when they're considering whether they have remote employees, they might think, oh, I have a sales rep who's in a few states, or now I have someone who's doing drafting work for me in a different state. This is all part of the change, and maybe they moved there temporarily, maybe it's permanent, but that's why we're going to talk about some of the issues that go along with these things. So if we have, this one's hopefully a pretty quick one to answer. So if we can look at that, and see. Okay, so pretty evenly split right now. Okay, and then the second poll question is really the whys. Why do you have employees that are remote now? Did they move due to COVID and they haven't come back yet? We don't know, when they will be. Have they moved but they want to stay remote permanently? They've figured this works now. Or we have a new work from anywhere policy and it allows them to be remote and move, or is there a combination of the above? Again, we'll give you a few seconds to answer this, just to kind of see where everybody in the audience is sitting in this question. Okay, let's see what our results are there. Okay, interesting. Yep, a lot of hybrid. I think we're all sort of in flux on this side of things. So I'm going to let Dee kick us off on our topic.
Okay, so the COVID-19 pandemic has dramatically shifted companies' attitudes toward work from home or work from anywhere options. A year ago, most places were brick and mortar and everybody worked in the office, but that is not the case any longer. So what is the new normal and how does it impact businesses from a state and local perspective? That includes from a payroll perspective and from a compliance perspective. You may be opening up a can of worms that you don't even realize.
Mm-hmm. Yeah, and when we hear the term new normal, I don't even think we know what that is yet. I think it's still, just from the poll question alone, we can see, people have a mix of hybrid, and some of it's still related to COVID. Some of it's, we're shifting things in a different direction. And I think when I look at state and local tax and where things are going from a state perspective, regulations, and with COVID and subsequently with Wayfair, and I'll get into that in a little bit, but it impacts so many different levels, and I don't even think the states know how to keep up with it. So it makes it very challenging for businesses and for us as advisors to guide you down this route. Next slide, please.
So the payroll tax implications for a remote workforce, which payroll taxes apply? Well, it depends on the situation. It depends on where they're working. If your state has a reciprocal agreement with the state that they're working in. Unemployment insurance, it depends on where the business is located and where the employee is located. Workers' compensation also depends on where the work is being done, whether it's a temporary position or a permanent position, and where the business is located. So there are a lot of different considerations, and each state has their own set of rules for those considerations. The nexus for state taxes, the very first indication is a physical presence in that state. If you have a physical presence in that state, then you will initiate other tax obligations, other nexus obligations as far as income tax, franchise tax, sales tax, and other taxes that are out there. Just hiring a person in another state will trigger a lot of these responses.
Next slide, please. So I think when we're looking, and as Dee mentioned, you know, the triggers for the other state and local taxes and nexus, it's really going to matter whether it's COVID related and if it's temporary or if the move is intended to be permanent. I think in the past, when we look at state and local tax nexus for income tax, sales tax, we typically look at, you know, the physical presence. Do you have people working there? Do you have independent contractors? Do you have remote salespeople? Or do you have like trucks driving in? You know, those are all your typical physical presence factors that have always existed. Then you have the economic nexus, which is really the sales levels. Like, are you selling over that certain threshold that was dictated from the Wayfair case? Now, when we're looking at remote employees, you know, there are variances of whether that employee is considered to be temporary or permanent. So if we look at, is the move due to COVID? Like, did they move to Pennsylvania to be at home because they were quarantined from their office and now, and they're sitting in Pennsylvania still? Did they just move out of the city that they currently worked in? Like, were they headquartered in Columbus, but now they're working in a suburb out of their home office? And we'll talk about Ohio because there's some interesting rules about how that's working. Oh, okay, sorry. And then, are there emergency guidelines in place? There's nexus waivers, and I'll talk about a little bit about that in a little bit, but the nexus waivers basically in 18 states have said if your employee is just in this other state because of COVID and it's temporary, you're not going to trigger the typical income sales tax nexus physical presence factors that you would if it was not a temporary COVID situation. But that's only 18 states. The rest of the states haven't really provided guidance or have said it doesn't change anything. You know, if the move is temporary, is there a timeline to bring the employee back? Are we just waiting on, you know, people to be vaccinated to bring them back? Or is there a set deadline like everybody has to be back? These rules are in a constant state of flux. You know, the states have come out with different guidelines and then backtracked and then changed it and then gone forward. So it's really hard to maintain and figure out what's going to apply for them. If the move is intended to be permanent, and I think now that's kind of where we're in the sweet spot of, you know, COVID, it's not over, but you know, people are trying to make decisions about going forward. Employers are seeing, okay, you know, this person worked fine in his remote location, so we can keep them remote, or if they're implementing a work from anywhere plan. So now you're looking at permanent rules, and that kind of backtracks to where the rules were before. You have a physical person in another state who's meant to be permanent, and that doesn't, all the nexus waivers, all the other special rules won't apply because this is really the going forward perspective. Next slide, please. Dee, do you want to talk about
The Ohio municipal issues are really interesting. House Bill 197 passed in March of 2020 basically said for COVID-related remote workers, you will keep the tax at the workplace. So if your business is physically located in Columbus, you would continue withholding Columbus tax on all of your employees, regardless of where they're remotely working from. That is still in effect, and it will continue to be in effect until 30 days after the end of the emergency declaration. But there are locals that are fighting that, actually. Before COVID, if an employer had a remote employee working in a different city, a different locality, you would withhold based on the physical location of where the worker was. If they also withheld based on the physical location of the business, then the employee could request a refund of those funds that were withheld in the workplace because they weren't actually working there. Now that the House Bill 197 is in effect, you will just continue withholding the workplace tax for now. Like I said, there are some lawsuits out there on this. I think Columbus is one of them, and they're arguing the refunds for the employees that did not actually work in that locality. I know that Rita is withholding, they're acknowledging and holding the refund requests, waiting for the outcome of the lawsuits. So it's another thing that's in a constant state of flux. The rules are changing, and the lawsuits will definitely have an effect on what happens going forward.
Yeah, and it's super complicated. I mean, Ohio municipal taxation is a really complicated thing anyway. And I, you talk about the multi-state aspects, and Ohio alone just makes it difficult. I'll give a brief example. So my husband works in a bank in Cleveland, but he works on a trading floor, but he's been home since last March, and they've been contemplating whether they even need to come back. And so, but right now I know that they're still withholding at the Cleveland level, but he spent over a year, working at home with a different tax rate and different tax rules. So it's interesting to see where this is going to go. And I know the court cases that are out there, the refund claims that have not been processed, but then if you have a remote employee who's going to be permanently not out in that city, then it kind of goes back to the original rules and how it should apply. So it's very complicated, and some employers don't have the payroll systems, the capabilities to be able to do this differential withholding. So it can get very complicated very quickly. Next slide, please. So this, I'm sorry the graphic's not a little bit bigger. It's a little hard to read, but when you get the handouts, or if you have the handouts up, you should be able to see it. It's kind of just to give a guideline of the scope of where we have to look when we're talking about an employee moving to a remote workplace. And I know Renee mentioned in her subject about how we're recruiting in a different way and offering remote working to certain people. I've had interviews recently where people are out of state already, and we're going to hire them because they're capable of doing that job from a different state. But it definitely has the implications for the business for us to have somebody sitting in a different state. So when you have an employee that is, requests to move to a new state or is being hired in a new state, how does that affect the business? And I think, just like I mentioned before, you kind of look, is it a permanent? Is it temporary? And on the temporary side, due to COVID, you have to look of, does the state have the nexus waivers for income and sales tax, so it won't trigger nexus for you? Are there emergency orders in place that are allowing this temporary worker to be there and not trigger these other business taxes? And are there thresholds to meet payroll withholding requirements? And that we'll talk about too, because that was existing before, but whether, you have a temporary employee who's working part-time in another state will get kind of dicey as to what payroll needs to be set up and what can be accounted for in your own home state. But on the permanent side, if you have a permanent worker who's going to be living in Pennsylvania now and you're in Ohio, you have triggered income tax, you've triggered sales tax nexus, and you've likely established nexus for any franchise taxes, any business taxes, potentially property if you have home office equipment stuff there, and you'll be required to do all the payroll registrations as well. But I think you have to go even further than that. I had a client who said, I have a guy he's a great employee, he wants to move to Georgia. And we had to go down this rabbit hole, I say, because it wasn't just the withholding, the unemployment insurance, the workers' comp. Now, okay, sales tax. Okay, well, what do you do? What do you sell? Because now you have nexus for sales tax. Do you need to be collecting sales tax from your customers? What are your sales? Income tax. If this employee is not just a sales rep, if he's actually doing something else, his activities aren't protected under 86-272. So you will have potentially apportionable income to Georgia. And then Georgia also had property tax, personal property tax. So any home office equipment, will have to be reported. Now, they're not big expenses necessarily, but they're going to play into your calculations of tax going forward. And I think even on the temporary side, if the employee is there for temporary and there's no nexus waiver, you have to consider the same factors. Are your sales now taxable in the state, and do we need to collect tax? Or if you're a manufacturer who's, selling to wholesalers, do you have the right exemption certificates to support your tax exempt sales? So it definitely opens up the complexity of what is required just by having one person in a new state. And I think what's interesting is, even on a personal level in our company, I think we think the work from anywhere, it's a great opportunity, but I think without thinking it all the way through, okay, no, someone tells me, oh, I want to live in Colorado. Awesome. Well, we never had Nexus in Colorado before. Now we do. So what does that mean as a business as a whole? Next slide, please.
So the payroll withholding registration, the biggest thing that I will emphasize on this is that there's no one size fits all. Every state has their own rules. It would be nice if they were all consistent, but they're not. They're completely independent of each other, and the state makes their own rules. So when you have an employee that moves to another state, you're going to have to research the specific rules in that state. The payroll tax applications used to be a standalone application, like you could just register for withholding in Indiana. Most states, that is no longer the case, which is how they're getting their Nexus opportunities. Most applications now are a complete business registration. You answer the questions down through there, and they'll tell you what taxes you're obligated for based on your answers. They're not always correct, but they really do their best to lead you through what you should be filing. When you do that registration and you think that you're just doing it for payroll tax, it can immediately create Nexus for sales tax, use tax, unemployment, corporate income tax, like all of the other taxes can be triggered by completing that business registration application. So definitely keep that in mind as you're doing these things. It's not like it was, even 3, 4, 5 years ago. So you really need to be conscious of what you're filling out whenever it comes to these other states.
Yeah, and I'll add in there, Dee, I know you and I went through a thing with New York recently where, the questionnaire and through the application, it had us checking the boxes, we were answering the questions, but as we went forward, it did trigger unemployment insurance as well. But, and me learning about payroll, knowing a little bit more about payroll than I do, we were able to say, this doesn't seem right. We could call this, we could say, no, this is the situation. We really don't need unemployment insurance. It's going to be handled this way. But it doesn't, the applications don't necessarily help you with that. And some of the states aren't really sure on the guidelines of, if you read the regs, it looks like it would apply. But then when you get into the actual depths of what you're trying to do, you find that you don't have to file that. So I think it's a complicated process, and some states don't make it, most states don't make it easy for you. So.
Right. And if a client or somebody that didn't understand the nuances behind that got that determination, they would just sign it and fax it back in and start paying New York unemployment in addition to Ohio unemployment, which is not accurate. So
Right.
That's where it's good to get the advice of somebody who maybe is more familiar with what should be done.
Yeah, definitely. Okay, next slide, please. I'm only going to talk about this for a minute. It's in the handout, but I thought it was a really good graphic, because this is kind of when you're talking about remote workers that maybe are temporary or going in and out of the state. And I know we're not really focused on that in this discussion because it's more about remote permanently moving or living in another state. But this graphic kind of shows, with regards to withholding tax, how friendly the state is. And the very unfriendly ones are the ones like, from the first day they're in the state, you basically have to withhold income tax for them. There are some that give you more of a 30 days or more before you're subject to the withholding. So those rules are important to keep in mind, even just timing wise, when you have a remote employee who might be moving or thinking of moving to those states. When does that actually trigger? When do you need to start withholding, and how much time do you have? And if you do have temporary employees who are in and out, you know, what it means before you need to register for withholding in these states. So again, I don't know, Dee, if you have anything to add with this, but I just thought it was a cool graphic about the friendliness or not of states for this side of things.
Yeah, I agree. I think that it's interesting. I don't really think that businesses are necessarily going to use it to make decisions on who they hire or where they allow their employees to move, but it's a really interesting graphic.
Yep.
And
Okay, next slide, please. Thank you. So as Dee mentioned, you know, now a lot of the applications are combined. So like Michigan, I know, for example, you go through the payroll stuff before you even get to the sales tax, corporate income tax questions. So you have to answer those questions up front. And it used to be in the old time, because I will tell you, for years and years, I didn't even have to do payroll tax registrations. It was something out of my realm and I didn't really consider it. But because of them being combined now, states really want to get a full picture of what you are doing in that state. And when you register for payroll, maybe you don't register right up front for sales tax or income tax or any of the other taxes, but it may trigger nexus questionnaires that are going to come back to you from the state, or it will, you know, flag your account. I think the states are a lot more savvy about communicating between departments now. So you're knowing, like, I know if you register in Texas for a sales tax permit, you get a letter from the franchise tax, you know, almost immediately saying, hey, you have this too. So states are really getting savvy about this and what it triggers with the nexus questionnaire. And I would recommend don't answer the nexus questionnaire without some professional advice, because any previous activities, things that you haven't thought about or thought was limited, you know, maybe you had a sales rep there for 10 years. Well, because you had the sales rep, you probably triggered physical presence nexus prior to this point, but now you have another employee, or you've maybe established economic nexus because your sales are high enough in that state that you might have some past liability or exposure that you haven't addressed. So when you answer that nexus questionnaire and you say, yeah, I've been driving trucks into this state since, you know, 2011, that's giving the state the right to say, hey, I can look at anything you've been doing since then, because that's when you established nexus. And I think people think, oh, I just have this new employee now, it's a brand new thing. You have to look at your past and make sure there's nothing else going on. Any pre-existing tax exposure or potential liabilities that you had prior to that, even if it was just economic nexus where you met that gross thresholds in 2018, well, we're coming up on 3 years of that. So, you know, you could have sales in there that you should have charged tax on, or you could have other exposure there. And really knowing your full picture before you register into a new state for just a remote employee is really important, because there's planning things that you can do. You can do VDAs, which are voluntary disclosures, to be able to go to the state, say, hey, we know we had nexus since here. You know, it'll help you waive penalties, in some cases interest, and it'll help remediate any exposure that you have out there that may be pre-existing to this particular situation. So it's really important to get a handle on that before you just go. If you're a brand new company and you haven't been doing a lot, you now have just remote employees, it's a little more straightforward. But anyone who's been existing, you really need to look and make sure there's nothing else that's triggering a landmine in the back. Next slide, please. I know we're coming up on the end, so I'll go through these a couple slides fast, because I think we need to get to where you guys can ask some questions. So, I mean, obviously there's extra costs of doing business in these other states. The registration costs, if you need Secretary of State, if you have, you know, need a registered agent, that's an extra fee. The payroll tax and related compliance costs, income franchise related compliance costs, increased sales tax related compliance costs, it can really get out of hand. Increased consulting fees just for tax technology. If you need to build in a system that's going to handle the payroll aspects, if you've been doing payroll, you know, because you've had 1 state or 2 states to worry about, but now you have 5, do you need to hire an extra consultant? Technology from the sales tax side. So there's a lot of factors to consider, and you think, oh, it's just one guy moving to a new state. But I think you need to think down the road, what does this mean? Next slide, please. But, you know, I'd like to say, well, just ignore it. But we don't want to ignore it. I think because of the Wayfair case from 3 years ago, states were already getting more aggressive. With COVID, you know, some states have seen their budgets, you know, get hit hard, and they're looking for revenue. Some states have done really well, but I think they're definitely more aggressive. They're looking at our taxpayers that are, you know, maybe have hit the economic nexus thresholds and need and should be filing, and they're reaching out in ways that you wouldn't expect. I had a client call me. His sales were way under the California threshold of 500,000. But out of the blue, he got a nexus questionnaire from California, and luckily for him, he didn't have nexus. But you can see how they're fishing and trying to get people. So the moment that you put an employee there and you start paying payroll tax, be aware that they're going to be looking at the other stuff that maybe you're doing. The interconnected tax departments, again, like I mentioned, you know, you register for one, you might be red flagging for somebody for another thing. Combined applications, phishing, you know, like states that are reaching out, hey, we're using a third party data mining, you know, through credit card processing and coming up with names of who's selling into our state and then sending letters. So be aware of that. And then the increased taxable base, they're trying, you know, states are aggressively pursuing, you know, software as a service as a taxable transaction, where in the past that maybe was treated like more of a service and not taxable. They're getting aggressive on that side of things too. So you have to be careful of what you're doing, where you're doing it, who's doing it, how you're sourcing the sales to the clients or to your customers, and what effect does that remote employee have to this whole formula and calculation. And we have seen an audit uptick. I know states were a little slow after COVID hit, but now their workforce is working remotely, and they're reaching out in new ways. So it's best to really get ahead of it and not let those problems build, because if you look forward and look down the road 3 years and you don't address it, well, it's 3 years where you may have exposure for multiple tax types. So it's really important to not ignore it and to get ahead of it. Yep, that's it on my slide. So I think we're ready for any kind of questions.
Awesome. So we have a lot of great questions here, so I'm going to try my best to get through a majority of them. So the first question we have here, I think it might be directed to Renee, but it says we have a sick leave conversion option when a maximum number of days have not been used. With folks working from home, those numbers are building because they are not taking sick time. What can we do to assure this is not being abused? If they were in the office, they would be taking the sick time. And let me know if you need me to repeat that.
Thank you, Imani. That's actually a very great question, and a very common question. And, you know, from a resource perspective, the employer, this is a challenge, and this is one of those gray areas where, you know, having it defined within your handbook as to what those leave policies are. However, you are going to have some employees that, you know, should be taking that time, but are not. So the best practice that I have heard some other companies that have utilized is that consistent communication and expectations from their manager shared back to the employee of, you know, we know you're working remotely. Please understand that, you know, our leave policies and our paid time off is there for your benefit. Please be sure you're utilizing it accordingly. And so keeping that consistent communication is a great resource and an option, so employees know, number one, that you're still looking at it, and number two, that the expectation is there that they use it in the correct way.
Awesome. Thanks, Renee. The next question I have here is for Kathy. It says, does it make sense to file a protective refund claim or just wait on the court?
I'm actually going to let you do that one, but.
Okay.
So my opinion would be you should go ahead and file it. They are putting them in a queue and holding them. Some of them are processing them. Some cities are processing them, some are not. I would definitely recommend going ahead and filing them and then just waiting.
And I think and correct me if I'm wrong, but I think if the claim is based upon a typical, not COVID related move, they're still processing those. I think,
Rita is not, but
oh, okay,
other municipalities may be
okay,
processing those.
okay.
Awesome. The next question I have here is, can we not withhold local taxes and leave it up to the employees?
No. The law in Ohio is you withhold local taxes based on where they live or based on where they're working. That has not changed. It's not an optional tax. It's definitely a required tax. The only thing that has changed is with COVID, whether you can continue withholding for the workplace instead of where they're actually working from for now, but you do not have the option to not withhold.
And I think that would work this from other states as well. Like you know, unless there's like a reciprocal agreement, correct? Like where
Yes.
it would shift, but for the most part, if you have an employee in the new state, you would have to withhold in that new
Yes.
state.
Great. And the next question I have here is, if my office is in Akron and I have an employee working remotely elsewhere in Ohio and they live in a locality where there is no income tax and they have been withholding Akron income tax, can that employee request a refund of that tax? What if they do occasionally come in the office?
So it depends on whether it's COVID related or not. If it's not a COVID related move, if they're actually working remotely from their physical location where there's no tax, then you should not be withholding Akron tax. If you did withhold Akron tax, yes, they can apply for a refund, but they have to have some sort of documentation. The days that they physically come into Akron, they're obligated for Akron tax. The days that they work from home, they're not obligated. So it's a record keeping challenge as well, but they can definitely request a refund, but they're going to have backup documentation on it.
Great. The next question we have here is, how does permanent hybrid work affect the city taxes?
I think that that's going to end up going back and forth again. This is just my opinion, but currently, because of COVID, I would imagine they're just withholding workplace tax based on where the business is physically located. After 30 days after the end of the emergency declaration, I don't know what that's going to look like. My instinct would be they're going to have to withhold tax from the workplace whenever they're in the workplace and from wherever their home work location is for the days that they're working at home.
Yeah, I would look at it and equate it kind of to, like professional athletes when you're looking at multi-state, they're going to every state to play games and you have to withhold from all those locations. So I would think after COVID, when there's no extra level of specialness about it, we would have to do similar things. But I think that's where it's going to get complicated for the employer to be able to track it, and you have to have those things in place to be able to, for an employee to identify, I'm in the office, I'm home, so that the right withholding goes through.
Awesome. The next question I have here is, if we use independent sales reps out of Ohio, have we triggered Nexus in another state?
Yes. So the easy answer is yes. Independent reps, independent consultants, subcontractors in other states that are doing stuff that benefit you will trigger Nexus, especially for sales tax, because sales tax has a really low threshold. But and it may trigger income tax, but if all they're doing is sales reps, their activities are generally protected by 86-272, which basically means you might have an income tax compliance requirement, but you can claim 86-272, which allows you to not have to, it's like a zero return. But it won't exclude you from like the gross receipts taxes in different states or franchise taxes. It only applies to income tax. And then from sales tax, you hit the Nexus trigger with those independent reps.
Great. I'm going to try to get through a few more questions. So if you guys have to drop, no worries. This will be recorded. So the next question here is, how do we track exempt employee, and it's a salary time, since they don't need to clock in, or should they be clocking in?
That's a tough question. They don't necessarily need to be clocking in exactly, but they do need to be tracking it in some way, or at least at some point they will need to be tracking it. So it can go back to Renee, like having a specific policy in place for their hybrid schedule. And, you know, if they're supposed to be in the office Monday, Wednesday, Friday, working from home on Tuesday and Thursday, you can probably depend on that agreement for the exempt employees for the taxation of it and expect them to adhere to the agreement. I don't necessarily think they need to be clocking in and out every day, but there is an expectation of, you know, splitting the time based on where they are working each day.
I would
Great.
agree with that.
We have. Sorry, go ahead, Renee.
No, I'm sorry. I was just saying I agree.
Awesome. I have 3 more questions here, so we're going to get through these. It says, so if an employer is located in an area with no local tax, but the employee lives in an area that has local tax, is the employer required to withhold the employee's residential local tax?
Currently, the answer to that is no, simply because of House Bill 197. As long as the emergency order is in place, they can withhold, and the employee is not obligated to pay that either currently. 30 days after the end of the emergency declaration, then yes, the employer is going to be required to withhold based on the employee's work location, which is their home.
Great. The next question we have here is, for local taxes, if the employee is out of state, are they eligible for I think it's RITA, R-I-T-A refund? I wouldn't think Ohio lawsuit would affect PA residents.
Well, I would think that if the PA residence is having some type of RITA tax withheld, it's because the business is located in a RITA taxing municipality. So it goes back to the same rules. So I would say the PA resident should apply for a refund from RITA from whatever municipality they're having withheld, but the lawsuit will affect that. You know, it will affect everybody that requests a refund through RITA, based on whether they worked in the RITA location or were working remotely from home.
Yeah, and you would have PA withholding
Yes.
that the employer would be required to withhold. Yeah.
Yes.
Great. So last question we have here, guys, and any question that we didn't get to, we will be sure to respond to you directly after the webinar. But it says, we recently brought on 2 employees, 1 accounting / admin and 1 officer, for a contracting company physically located and doing business in Ohio. But with these 2 employees permanently working from home in Colorado, we are withholding Colorado income tax for these 2 employees. What other considerations do we need to consider? Maybe workers' comp?
Definitely workers' comp.
And definitely you will have potentially sales tax and income tax, and it depends on what they're doing there, of whether and if you have subsequent sales to Colorado, what those sales are they taxable? Should you be collecting from any Colorado customers? But and their activities, I think you said accounting, and I forget what the other one was, but those would not be protected activities under 86-272. So you have income tax obligations as well.
And if they're living and working in Colorado,
sorry, I was just going to say, depending on the kind of entity, if you're a corporation versus an S corp 1065, you may have different and flow through applications to worry about on that side of things.
and if they're living and working in Colorado, they would also be subject to Colorado unemployment. If they're not traveling to Ohio regularly, they can't be covered under Ohio's unemployment policy. Ohio BWC does have the option to add coverage for other states. It's like a private insurance policy that you can add on, but you do specifically have to add it on. It's not automatic. Alternatively, I think Colorado has private workers' comp insurance, so you could just reach out to an insurance company to get workers' comp coverage.
Yep, and the only other thing I'll add on to that is Colorado is one of those really complicated states from a sales tax perspective because they have these home ruled jurisdictions. So depending on where they are, it's not just registering for Colorado state, but you might have to register for Denver sales tax permit, which is separate. It's independent from the state, where that's unusual. Most states, it's the state and local are all together. But depending on where your employees are located in Colorado may have other local tax implications from sales tax as well.
Great. Thanks, ladies. Thank you for answering those questions. And like I said, if we didn't get to your question today, we will be sure to reach out to you after the webinar. Thank you for joining us for today's webinar on peeling back the layers of remote work, employee compliance, state and local tax, and payroll. We hope that the team was able to provide you with some valuable insights in regards to best practices and potential solutions. If you sign off today and realize that you have additional questions, you're always welcome to reach out to any of the presenters directly. Thank you again, and we hope you have a great day.
Thank you.
Thank you.
Have a good day.